Hello ladies and gentlemen, and welcome back to Educate to Trade live stream today. So this is actually live trading that will be happening later on, but before Enzo comes on, your usual Tuesday spot, we have a surprise guest here for you. He goes by the name of Julian. Hello Julian.
How you doing?
I'm good. Yeah, so Julian is has been involved with us here at Educate to Trade for quite a few years.
4 and a bit years.
Definitely before my time. So about four and a half years.
Yeah.
Okay, so why don't we start with a little bit of a background about who you are and what trading style kind of employ and stuff.
Okay, well right now I'm very laid back. Try to do as little as possible.
Okay.
Trading style. But I started working in the city in 1980.
Okay.
And went into a bank dealing room in 1984. In 1984, when I was 20, stayed in the bank dealing room till 2008.
Okay.
Then I traded my own money from probably the end of 2008 to on and off up until about 2016. Had a few years off, a few issues with my daughter not being very well. But came back around about the Brexit scenario, traded that for a couple of years. Then we had COVID, so I traded a little bit more in COVID. I was looking for events really.
Okay.
And then the second lockdown, 80th second lockdown, met Brad around about 2021. And he asked me if I'd like to get involved with experience, if you like, on as a professional trader system. And I said, yeah, why not? You know, I was a little bit bored, wanted to do something a little bit different. So that basically explains the involvement with Educate to Trade. A year after that, a year and a bit after that, I had a lot of personal issues with family, being very well. So I've kind of been in and out, leave of absence. There's still ongoing issues, but with some older relatives sort out. So
okay.
We're always trying to look after them. Takes you out. You can't do a job in trading if you're concentrating.
100% focus.
So you have to have the focus to be able to do a trading job the way that you should be doing. Although with Educate to Trade, a lot of it was on the setup and what sort of clients we try to attract, what we can do to make the business better. How can we deliver to students what you need to know market changing all the time.
Okay.
So I'd say that would be the initial involvement that I had with the company. Try and put us on a good footing of what we should be teaching, what's applicable, what's not applicable, because there's a lot of misconceptions at bank trading, retail.
Yeah. So so you said that you grew up. Well, you started working in a bank dealing room. So why don't we talk a little bit about how that would have looked? How would your day have looked back then? Because there must be quite a big difference between how trading is done now to how it is done back then, correct?
100%. You know, we've just done something earlier talking about some of the things that I would have done in comparison to what the retail trader wouldn't know or wouldn't do. The comparison is pretty huge. If I go back to 1985, for example, my first job was on telexes.
Okay.
Getting thrown bits and pieces of paper, but within 3 months you're sitting at a desk answering calls. Then another 3 months down the line there, you're covering currencies. Probably took about 9 months before people were confident that you sit on a currency pair. I was a foreign exchange trader. There's obviously a lot of other markets to trade. Mainly I traded individual sterling products, so cable sterling against the dollar. It would have been sterling mark back then, and then euro sterling. But gravitated to change to trading everything. The way the banks got smaller and smaller, individual traders that were trading individual currencies ended up trading multiple currencies. So I would imagine that near enough I would have traded, I think, from Polish to Norwegian to Swedish, to all the major currencies, dollar, yen, Swiss. So ultimately, everything, Turkish lira, you had to price stuff up in Turkish lira. Not necessarily run a lot of positions. Back in those days, it was all about pricing.
Okay.
Could you stay one step ahead, as in pricing customers, funds, and interbank. When I say interbank, it's banks. Whereas now there's a link where everybody trades on platforms. Back then it was calls. Used to call out. There were no platforms. Used to call out, and it's a never-ending. So you quote probably 3,000, 4,000 direct rates a day to your interbank counterparties. It was a case of like just trying to avoid traffic. A lot of it was avoiding traffic, avoiding getting hurt by. That was the skill. The skill factor was being able to make the rates that would avoid you getting run over, as in losing money. So that means that you could do your own things as well. A lot of it was negotiating. It was like the spaghetti junction.
Yeah.
You know, it literally was a car crash around the corner every minute. Especially in sterling, it was moving quite a lot. It was one of the more volatile currency pairs as it is today. So, in relation to the way the market changed, in the mid-1990s, we started getting platforms, reduced the need to call out and make calls. So there was an advertised rate screens which would enable you to use those advertised rates, like with Reuters and EBS. Obviously, you've got your own.
So, sorry, one sec. Go and press go live on my screen, yeah? Sorry.
And then the bank started offering platforms to their customers. We were the same. We offered platforms to customers. Some were better than others. And so liquidity became something that became very premium. If you could get the right platforms and have the right credit facilities to be able to use the liquidity, then you could approach bigger customers, give them the opportunity to access your liquidity. It would still be on a quoting basis, but possibly a little bit more liquidity than we would have had. So it changed from being a little bit streetwise in quoting people to being a little bit more technical, as in making sure that you were aware of what the platforms could do. Whereas obviously now everybody's got their retail platforms on the retail side of it, and they're all they're very good technicians. Say,
yeah,
like the retail people are very good technicians. Whereas obviously the banking side of it now is totally different. I'll say that whereas the risk side of it in our day, there was probably a little bit more risk attached. Now, I would say that bank dealers are more inclined to just try and make small amounts of money on every trade that comes their way.
Right.
Whether it comes their way on a direct basis or quote. So like, for example, a client might call up and say, you do this, or they hit a platform, and that would then become your position, and you would have the opportunity to hit other platforms. There'd be a scale of rate. For example, if somebody needed a price in 500 million, there'll be a rate that will be wider than the obviously the rate that's in the market, and then you'd make that rate and then be able to access the amount of liquidity, shift 500. But a day-to-day bank trader now may be looking to be more accountant.
Okay.
They're literally trying to make small portions of money on every trade, whereas I would say more in our day, I think there would be a lot more people trying to add positions, try and do something a little bit different. Changed a lot, and also it's down to management and risk management. You know, what happened around about 2008-10 area where the markets blamed the banks for market turmoil, subprime. They wanted less risk.
Yeah.
And so they basically took power away of maybe the traders to say, look, you know, all we want is regular income.
Okay.
We don't want risk. Although it wasn't the day-to-day traders that cost the money, it was more than the model that the banks were running in, lending money to people that wouldn't be able. We spoke about it earlier. That wouldn't be able to pay it back, which is subprime.
And then boxing them up and then betting on.
That's right.
Also taking insurance policies against.
You've got it.
The downfall.
Derivatives, junk bonds. So like packaging up a load of rubbish and then setting it out as a junk bond. Yeah. Somebody had to undo them at some stage, which is what cost all the banks their money. But it wouldn't be the individual
that
traders.
fateful day of
Well, there's plenty of fateful days. I mean, probably the big one was probably Lehman's.
Yeah, Lehman. That's what I was thinking of. Yeah.
You know, I think if you look back now over history, I think that the Federal Reserve would have probably cost them more money to have let Lehman's go bust than bailed them out.
Well, they did bail a lot of other
they did
banks.
Smaller, and obviously
the pensions.
Fannie Mae, Freddie Mac. They bailed the car industry, and obviously they've had this quantitative easing that's gone on 2008 onwards, low interest rates, which has created this build up of inflation, uncontrollable, when it got out of hand in 2022.
Yeah.
So there's been lots of aspects of what we would have probably thought it's gone on too long now. Can't keep printing money, making it easy for people to get money, to then reinvest, and eventually something's going to break, and we've had this inflation spiral since. So
obviously you've been trading from so you've obviously been trading from times where you'd literally have to pick up a phone to call a broker or your interbank system to put trades in. So how was the journey from that system to people using computers? Was there a lot of resistance within the trading community to switch over to computer only trading?
100%.
Yeah.
You know, I mean, I was kind of even though I wouldn't say I was real old school, because the old school would have started in the late 70s, when the market was very, very young. I was probably the next generation. We were basically using brokers. The brokers were our friends.
Yeah.
You know, around about, for me, kind of happened 95, 96. It was around earlier than that, but it wasn't. I didn't particularly like using it. So there was there was definitely a lot of opposition. A lot of the traders didn't like to use it. Then what happened is that, you know, more and more, especially on the continent, I think a lot of the overseas banks started to put their liquidity. That made it. They found it easier.
Okay.
And obviously, maybe the language barrier. We're talking mainly English-speaking market.
Okay, that makes sense.
So they added their liquidity, and everybody wants liquidity.
So they have to follow.
So you literally had to start using systems. By, I would say for me, around about 2001, I was extremely confident, and the broker was becoming a bit of a rare breed. Unfortunately for them, they were kind of, if you like, out technology.
Yeah.
They couldn't keep pace with the technology. Spoke to lots of guys that I knew quite high up in the broking industry at the time, and they didn't know what to do, and probably were a little bit older and didn't particularly want to change, see the need for change. I mean, one of the things that's very, very paramount, there were a lot of ex-traders that left the city between 95 and 2000 for redundancies, etc., that ended up working for electronic broking firms. Some were extremely successful, but at the time they were just taking a job.
Right.
They were just going, I've just taken a job to stay employed, etc. I've met some quite recently actually, and they've done so well. Because what they did is they were the first people. I think, if I was going to give anybody tips, is don't be scared of technology.
No.
The sooner that you take it on board that it's here to stay, then the sooner you use it, make a difference. Because I think that being a bit resistant to technology, especially for the older guys, will definitely catch you. Not in a positive way.
Yeah. So obviously, from there everything's being computerized. How long was it after that until you started to see, real algos coming out that were actually effective? Obviously, these big institutions. I think the last article I read, about 20% of their profit is actually now coming from. So it's still a long way off, but there's definitely grown quite substantially over the years.
Or algos, depending on the algo they're talking about. An algo to execute business.
Right.
Then it's an input to a computer. For example, if there's a hedge fund that needs to sell, say, $1 billion today,
okay,
then they might not want to go straight to one bank and ask for a price in $1 billion.
Right.
In my day, they might have come to a bank, asked for maybe one price in 500, another price in 500. Execute their business, get it done.
Okay.
Depending on the speed of how they wanted to do it. So now, in terms of doing the business, I would imagine that in a market that's maybe not so volatile, for the hedge funds who need to sell $1 billion, use that as a payout. They might just put that algo into, so they'll put computer programming. They'll just let the computer do the trading for them.
When it comes to liquid levels, basically.
Well, they'll probably just be consistently selling small amounts every minute. Small amounts that aren't really going to rock the market. And sometimes, I told a story in there that somebody told me recently that they had a guy looking to buy £1 billion, and they actually got the £1 billion on an algo. 30 points lower than where they would have. Easily 30 points lower than where the mid-market was before they started.
Okay.
So what the spread will be on £1 billion now, I don't know. But, I would imagine in euro-dollar, the last time I quoted a rate, I think it was a 30-point rate we had to quote.
Okay. That
would have been back in 2008, 2007, 2008. So what that rate would be now, so effectively, that's a spread, so you're going 15 points either side. But the market changed as well with a lot of production. They called it MIFID and KYC, where you couldn't even read a client. So if you knew a client was a buyer, you couldn't read him as a buyer.
Okay.
You literally had to make a market rate. That changed as well because there was no way of actually margining your mind to actually make some money.
Okay.
You weren't even allowed, if you thought you was a buyer, you couldn't buy before it came to the market. So there were lots of things that changed, but in terms of the algos, it said to me 20% of the money they make, different money or executing business.
Right.
Okay, so if I would say that 70 to 80% of the business, corporates, the real money, hedge funds, corporates do today done on platform. Whether they make money out of it is a different thing.
These are just putting orders through the book.
Yeah, this is just putting orders. I would imagine probably, if I go back to 1995, when 90% of the business would have been done through banks, I would turn around and say that, as in asking for pricing, orders, etc. I would say that now you've probably got 10%, maybe 15%. That flow will go to actual banks, as in make me a price or that for me. The majority of it now, because I'm so efficient.
Yeah,
it's efficiency, and much as for the people that are still in the banking brokers, it's just all about efficiency. Markets become very efficient. It still does a lot of the same patterns, but it's much more efficient. As in, sometimes reader clients still need to deal with you, then that would then be down to you whether you can do and use the available liquidity that you may have to get out of that trade at a decent profit.
Are you saying that it's? Are you saying the market conditions now are harder to make a profit out of than they were, say, back then? Or
I think banks make money in different ways now. Back then, I mean, if I'm talking about purely foreign exchange, you've got central bank guidance.
Yeah,
we never had central. Know what the central banks now tell you where the rates are going to be. So that came in the UK, came the early Labour, kind of Gordon Brown's first thing that he did when he 1997 he gave it Bank of England. So the Bank of England kind of telling you where rates are going to be. So there's big sections of banks that in fixed income rates where you know where they're going to be. So you're basically an account. You've got somebody that wants to lend money, borrow money, and as long as you match everything up. So if somebody gives you too much money, don't want that anymore, then there'll be somebody at that same rate that you can offset that with. But you use limits. So it became a bit easier on some products. Probably become a lot harder on other products. Products where you've got a very, very tight margin. A lot of spot products, obviously very difficult. But then in other markets like oil and Bitcoin, for example, is another one that's come to play.
Yeah.
Where you can trade spread bet now.
Yeah.
And you have done for a number of years. Those markets. So if you want to trade Bitcoin, as long as you get your leverage right, you can trade Bitcoin. So it's the efficiency. The banks just make money in a different way now.
Yeah. So there's you talking about Bitcoin. So just recently, a lot more of the institutes are starting to buy up Bitcoin heavily. So I'm just wondering if you had any views on how that would affect Bitcoin going forward, because Bitcoin used to always be,
scary
retail kind of space, but now it's turning into an institution.
And that's the reason why. Listen, the prediction for Bitcoin. Funny enough, I've just been on the telephone to a guy that first told me about it. The very, very early days, said you need to buy some Bitcoin. I did. I had it for about 5 years, and
yeah,
I didn't have a lot of it, but it would have been enough to have made a lot of money now. I literally got bored of having it after years. I know some people that bought Bitcoin and been ridiculously well off within a day.
Yeah.
So Bitcoin's a noise. It's become very, very prevalent because of how many people have used Bitcoin. For example, I went to Turkey a couple of years ago on holiday. Most of the businesses out there, what was happening with the Turkish lira, converting their money straight to Bitcoin.
Really?
They didn't want money in Turkish lira. They were devaluing the Turkish lira.
Well, yeah, they've got hyperinflation.
So they went to so they decided that a lot of the local businesses, as soon as we get Turkish lira, we turn it into Bitcoin. But, not all of them, but some.
Yeah.
Obviously, there's lots of elements of Bitcoin that are a bit shady. But when you start getting institutions trading it, then it's going to become a. Not saying it's going to go up in a straight line, but what you're going to do is you're going to find yourself with a market. Because if you get the professional organisations hedge funds, banks, all creating their own big portfolios to use that other crypto. Well,
Yeah, of course.
then you create a market. Bitcoin, when it came in, wasn't a market, just a number that somebody invented, and then all of a sudden it became popular, more popular, and the more traction it got. So obviously, I've had quite a few Bitcoin positions, not what I'd really like to win. That I had it on at the outset from around about 2010. I've made money, but not the way not like some of these bought it and be bought into the concept.
Just held it, yeah.
I think the concept exists now because of the people that are playing. You've got a market. Like when the Premier League got set up with 20 teams, or the first year they might have had more, but when the Premiership got set up, it wasn't what it is now.
No.
What it is now is you had a certain amount of advertising. Now you've got tons of advertising, like a multi-billion pound operation, but it wasn't when it got set up. That's taken 30 odd years. This is something that's been ongoing now for 15 years. It's used by the institutions. Manipulation. Elon Musk manipulating Bitcoin back in 2020, where basically telling people he was going to accept it, so he's buying lots.
Yep.
Telling people he was going to accept it for Teslas. Then all of a sudden, out of that trade, selling it, the market's going into the trade, turning around and saying, "Oh, maybe we won't."
Yeah, we've done the same with Dogecoin as well, didn't we? Yeah.
So there's a lot of market manipulation from very powerful people making a huge sums of money. The more that something becomes regulated, and when you get the banks involved, and hedge funds, then all of a sudden central banks start looking. There's going to be regulation. Regulation comes in. It's going to be a real market. It'll probably take the volatility out of it to a degree.
Okay.
So you have, but it is an alternative form of trading or currency, and so it's here to stay, in my opinion, and others will follow suit.
Okay.
What it's going to do, I'm not going to make that prediction. I already made a prediction that when it was at 80,000, the equity getting sold up, it never really came. Brad up and said, he probably institutions, knowing that something's going to happen, knowing that Trump's going to probably do something. People.
Please. One sec. You sit down. Carry on. Technical problems.
Yeah. What about Bitcoin?
Hear us?
About Bitcoin. Remember I said to you something going on in Bitcoin? Should have come off and it didn't. One of the one of the big guys. Yeah, or it could have been never known. And we know it's all stacked, but it doesn't think market intelligence of players is they know they're involved with a little bit like a conspiracy but unknown. They will be taking policy. BlackRock will be. They'll have all the Federal Reserve, all the central banks be quite happy to tell them on the back side.
Carry on. I know it's become so easy.
It will always take the volatility out, as in you have a two-sided market. Whereas before, you could sit there and do a Bitcoin trade. You remember one I did once when I was like trying to press my car, going home to take the profit out because it dropped about 6,000 points in it dropped more actually. I just want to cash out. I just want to crash the car. You know, 6,000 points from jumping in the car in this office, literally driving 400 yards up the road. So you know, I don't think we're going to quite get that volatility.
Saturated, isn't it?
I wouldn't call it saturated because
it's still volatile.
Because I think there's going to be a big announcement to be made, administration-wise, as to what the taxation around Bitcoin. I think this is why we live in the UK and we're a capital gain, aren't we, on Bitcoin? So
I think there's a change coming for January, isn't it? Especially in the UK. I think they're now going back and recollecting every transaction that you've done, I think. So people in the UK have a decision to make.
Exactly. Now, does that mean to say, is that the opportunity? If I ask you a question now, when we spoke, I think we were just in the early mid-80s, weren't we? I said there's something's happening, and you looked at it and you went, right, Christ, yeah, because it wasn't correlating with the other markets. Markets correlate. When they don't correlate, something's going on. Now, if I tell you where would be your level to go and put a Bitcoin trade on there? Exactly. Now, are we going to get there again? No one knows. But I guarantee.
I think what's interesting and to discuss about the saying earlier about rate hiking cycle. Obviously, historically, after a rate hiking cycle, when they start cutting rates, because do that equity markets.
Well, I mean, the key factor for equity market always going up, interest rates very low, and interest rates going up means they come back. Now we saw an initial when we started raising rates back in 2020, 21, 22, end of 21, early 22, when we saw probably the Wall Street go from 35,000 to 30,000. At the time, they were still printing money, which sort of was a little bit strange. And we obviously corrected that movement very quickly. But if you ask me about equity, I just think it's the demand. It's the demand, the amount of money that's still there that needs to be managed. It needs to be managed. Who wants to manage their own money? You know, we teach people at this organisation how to manage your own money, but people kind of don't want that. There's a model. The model is that if you just find equities will go up. That's been a model that's existed since the crash of like back in early 1930s in the States.
Obviously historically. So like you said, next week then up rates by 5 million. So effectively that could again.
Should be, but as you said, we're stalling.
Historically, when they've done that, we might see an initial false market. Maybe they'll pump it up, and then maybe that is when the equity market will actually turn.
But then what does BlackRock do if he's got no equities? It has to hold equities. We had this conversation before that the big well, that used to be the diversification, but now it's they're always going to want some form of an equity holding, and they can survive the crashes because of it's like the retail guy, the guy that we see here can't survive a crash. And I'll just had a quick chat with somebody there. Is like traders know what to do to get themselves out of trouble. Retail guys don't, because they don't experience the trouble. So when there is trouble, they get lost. So one of my advice we're talking to retail traders is if you don't know what to do, don't do anything. Just sit and watch and learn, rather than thinking you need to be involved, because traders have to be involved. Professional traders have to be involved. Hedge funds have to be involved. Real money has to be involved to a degree. Corporates have to be involved because they have natural requirements to do business. But if you don't have to be involved, learn. It's all about knowledge and picking up on that knowledge. So bear that in mind. If you feel, I should be trading, you don't have to be trading ever.
No, that's what we like you've just said with these guys here, the young guys coming in. They most of the time they're just watching, learning, sitting on their hands, and then you're looking for that move that is not priced in, and
Yeah.
and then you've got to be quick to execute.
Well, it's experience.
Yeah.
Experience in anything.
Yeah.
If you're an experienced plumber, you walk into a house, you see a leak, you go, I think I know where that's coming from.
Yeah.
If you're an experienced trader, you'll understand why the market may have moved. If you're not experienced, so experience does count, you know. And then you get the obvious, the occasional genius that comes along,
Yeah.
that can pick up things very, very quickly. Concentration as well.
Yeah.
You know, we spoke about that earlier on today. You know, that you have to concentrate and be able to concentrate. And if you can't, then you know, to be fair in anything,
Yeah.
you know, if you can't concentrate on your professional job, if it's going to be trading, then you're not going to get very, very far. So, but yeah, I don't know. I mean, if someone asked me where Bitcoin ends up at this particular moment, I think we'll be looking here in 10 years' time, and it's going to be maybe double value as it is now,
People
and a
call
very
it
liquid
600.
market. Yeah.
People call it
Yeah, well,
600
exactly.
on it.
I mean, what is the number? And this could be the low.
Yeah. I know.
This could be the low. So we're sitting there looking for 60,000, and I guarantee you, if we go down to 60,000, go, Brad, if you bought your Bitcoin, you go, no, I'm not buying. I'm waiting for 50. I'm waiting for 40.
It's never going to come back.
You know, so.
Are you back up, Russ?
Yeah.
All right. Cool. Let you lead the way.
Cool. So we had a few questions I've noticed on the stream. One of them was they were interested to know what your biggest trade was that you've ever done, or if you don't want to talk about your biggest trade, what's the most interesting trade that you've ever done that really?
I mean, I think I'm past the non-disclosure agreement that I would have signed back in 2007. But it would have been about $8 billion CAD,
Okay.
Canadian. But it was a trade that we knew about in the bank. We had to make $10 million out of it. It came to me on my desk, and we had to make $10 million to satisfy credit. I think we ended up making $200 million out of that trade. So yeah, that was a big one. Biggest individual trade would have been, and it was related to a lot of things that would just go in my favour. I knew of one flow that we had. Found out about another flow that a friend of mine would have had and wanted to be priced on it. So I put a big position on for the bank, and that was walked out with a £4 million profit that day for the desk, and everything was on the desk. That would have been in 2006, I think 2006. But yeah, I mean, every day, I mean, I could tell you many bad ones. I spoke about a few bad ones as well, plenty of bad ones. For example, probably one of the worst trades I had was, I think Bear Stearns went bankrupt in 2008 in either February or March 2008, and I knew I was leaving. I'd actually already decided I was going to leave the bank for a few reasons, and I just happened to be sitting in the office at about 7 o'clock, just finishing up some emails on a Friday, and I had a customer come in, and he dealt with me. Actually, it was about 6 o'clock. Dealt with me, and he wanted a euro sterling price. And I'm trying to think, we would have been around about 70. When I'd need to look back on the technicals to get the exact rate. About 70. We were at, and they bought euro sterling from me, 50 million, which wasn't the biggest amount in the world, but I just couldn't buy them back, and I was straight away 30-40 points offside on a few, and I was running a long euro sterling position, so I actually took the long euro sterling position out against it, which was profit, but I was literally 50 points out on 30, which was £150,000, not a particularly large amount in comparison to what I was doing at the time, but large enough to be pretty annoyed about.
Yeah.
And then all of a sudden I'm still sitting there thinking, what am I going to do, what am I going to do? And then somebody came in and gave me 50 million euro sterling. And I thought, well, I want to try and see if I can move the market back down. I sold the 50 million out, left me with 30 million short. Anyway, couldn't really move the market back down. It didn't go anywhere, and I left. All of a sudden, the news of Bear Stearns going bankrupt, which is one of the first of the investment houses that went bankrupt, came out on a Sunday, and I just went, well, I'm absolutely screwed is the word, if I can use that on the podcast.
yeah, you can.
Anyway, I think at one stage I was like £2.1 million down, knowing that I'm going to literally be leaving the bank within 6 weeks, and not the way I wanted to leave the bank. Anyway, I was in the office at 1 o'clock on Monday morning, like as in just after midnight, and I'm just thinking I'm going to get the emails that are going to be around. And as pure fortune had it, I managed to do a little bit of manipulation, and I managed to get the loss at one stage back down to about £500,000, and I eventually lost £750,000, and all I got was about 100 emails. Why have you told the bank that euro sterling's going up, and yet you've been caught short? And I'm like going, because I didn't know bank were like it. I had to make up stories, you know, it was ridiculous, and it kind of vindicated a little bit what I said earlier, that the bank's changed. You know, that risk position, they'd forgotten the fact that I'd had plenty of days when I'd made $1 million plus,
exactly,
2 million,
yeah.
4 million. All of a sudden, this 750, which by the way was a lot less than it could have been, highlighted a problem to me that I've made the right decision. That, and I literally spent the next six weeks of my career flat backing everything, really, just to turn around and go, I don't manage to make that money back. But yeah, it was just some plenty of good, plenty of bad. I call it the good, the bad, and the ugly, a spaghetti western. You know,
so what would your be advice now for anyone who wanted to go and trade for a bank?
Well, you know, talking about trading for a bank, you know, we used to see the pile of CVs that used to come in,
right?
And these CVs used to come in, and we were only ever allowed to take people on that had firsts. So if I met somebody that I thought was pretty talented, or you know, had a personality, because a lot of it was personality back in my day. It did change, became very numerical and very linked to the degree that someone would have. If somebody wanted to go and work in a bank, I would say you have to go to university, you have to get a degree, you have to go through that process, and then I would say it's nigh on a closed shop to get in the dealing room.
Okay.
I would say that you'd have to be like one of the top mathematicians, program writers in the country now to get a job in a dealing room. Does it exclude you from trading? No, because that's what retail is about.
No, of course.
So you can have the same knowledge, maybe not to the highest level of the degree, but you can obviously still trade for your own account. But obviously then that takes you risking money. So getting into institutions is tough. It's still available, but I get approached all the time by people, how can I get into the banking world? How can I get in the banking world? From what I actually know, it's not a world that anybody really wants to be in anymore.
Really?
It's very, very, very accounts, as I said earlier on. If you become a dealer in a bank now, you're an accountant rather than a dealer, rather than a trader. You know, it's more about how do you keep good management? Are you a good risk manager? Are you ticking every box? You know, are you dotting the I's and crossing the T's? It's a little bit more than that. I mean, that's from friends of mine that are still in it now.
That's obviously not the same as hedge funds, because they would be a bit more risky, right?
Oh, without a doubt. But the hedge funds literally have their pick of the cleverest people coming out of universities to pick from.
Yeah.
You know, you've got people coming out with ridiculously. I mean, in the US, in the States, all the top universities literally, you know, are training up their guys, and they've literally got a job on big money coming straight out of university to go straight into the big hedge funds. So that's, I mean, you can get into a hedge fund if you probably go through the banking route and you're supremely talented, and like a lot of things, if you do well, the banks allow you a lot more leeway. You know, is it the same now? It was in my day. If you were somebody they trusted with risk and proved that you could make money, then they didn't really question you. I go back to that story I just told. I got questioned on something that I didn't even think should have been a question. This was pure unlucky. In fact, if I'd have left and I didn't have an email trail of emails. If I'd have left at, I don't know, 5:30 on a Friday night,
Yeah.
which I probably would have done the majority of, well, probably 80% of the time. You know, I wouldn't have quoted the rate. They would have got a rate from somebody else, or they would have said, "Look, you know, we've got no traders in the office." I just happened to sit there. You know, I wouldn't have had the story. I would have come in and it would have been £1.4 million up with a £20 million that I had, or a 20 million euro sterling position that I had. So they question. There's a question all the time. You know, one of my friends just got made redundant recently, and on his exit interview, the questions they were asking. It's just ridiculous, you know, about other people. Is there a problem? You know, have you had a personal problem? They're asking. It's a little, you know, there's a lot more to answer for now, and that's why they don't want the risk. So as a hedge fund manager, you're going to basically take other people's money, you're going to leverage it by 10 times, 20 times, 50 times, and you've got to make money. But you've got a lot more time and a lot more resource at your disposal to do so.
Yeah, I think what was poignant, what you said, is about you putting a trade in of such size that it would actually move the market, whereas retail traders could never put anything like that that could actually move a market. So,
well, I think, you know, I've sat in this office where somebody's done a good trade, you know, sold Wall Street and wherever, and bought it back wherever, close to the tops, close to the lows, and you know that they feel that they're, you know, that they've moved the market in a degree that they wouldn't have moved the market.
No,
the amount of retail that's going through,
it's 5%, isn't it?
Well, it's big, but what it is, it creates volatility rather than moves the market. The market's going to be moved by the big hedge funds.
Yes.
You know, they're the ones that are going to move it, and obviously, you know, we talked about it earlier. You know, there are certain things that are going on in the market now. You know, like wars in Israel and wars in Ukraine, Trump tariffs. You've got the likes of China, North Korea, and Russia all getting together and having their own kind of meetings and showing some solidarity over there. They're the big events, you know. And you've also got still a continuing inflation scenario. You've got a president that wants interest rates cut while inflation's still in the system. You know, we had an interest rate cut in this country which wasn't related to inflation, probably related to the fact that we're in a recession that no one really wants to talk about yet. You know, which is the reason why immigration keeps going up, because it actually delays recession.
Well, there's a big march in a few days, isn't there?
Yeah, on the 13th. You going?
No, I'm not going. But someone was saying
I went to the last one, but I'm not going to this one because I'm actually on holiday.
Someone was saying that there's a chance it could move the markets. Well, what would you say?
No,
that's what I thought.
No, I don't think so. No, and it's well organised as well. You know, very peaceful. The one I went, and to be fair, I went. It doesn't affect me, but I can see it as a problem, as a major problem. And I had some friends go, and I said, "Yeah, no, I'm going to go." But and it was to celebrate being British, really, or English British, whatever you want to call it, and British values, which isn't racist. It's just basically celebrating that we live in Britain and we like things about Britain.
Yeah.
But there's a lot of markets that are like, for example, you know, obviously President Trump, he spoke about that. He wants low interest rates. He's a businessman.
Yes.
You know, he's a businessman ultimately. He knows that low interest rates is better for growth and makes business easier to do. But, you know, while you've got an underlying inflationary problem, then I mean, interest rates should move up and down with inflation, not necessarily. Or I mean, the other big mover of interest rates was recession. So if interest rates are going to come down in the UK the way things are going, we're going to have to be. I think we're in recession anyway, but the numbers don't say that we are.
Yeah. So we were talking about Turkey earlier on. I think this is Turkey's main problem was that they decided to set all their interest rates not from like the Fed or from like the Bank of England. They decided to take it all upon themselves. Maybe kind of what Trump is trying to do now. He's trying to take the power away from the Fed and control it himself, and it's a dangerous position to be in, isn't it?
I don't think. I mean, I don't like what the Bank of England have done. If I'm honest, you know, as a personal opinion, I didn't like Mark Carney. Never, in my opinion, never got anything right as the Bank of England chairman. He was, yeah, he never got anything right. I'm not sure particularly that they're getting anything particularly right now, but they're also hampered. But they've been given the autonomy to do what they're to use interest rates. They did it very well for. I would say they did it very well up until probably 2014, 15. Then or reasonably well. But I don't think since 2016. I think the Brexit, Mark Carney involving himself in politics and telling everybody what Brexit's going to do didn't help. You know, my position is I didn't want Brexit, but when it became democratic, I was happy for it to happen. You know, or I would back the democratic vote. But he decided that he was going to be a politician rather than somebody that's running the Bank of England.
Yeah.
And he's doing the same thing in Canada now. So,
do you think the inflation will start to come down in the UK, or you hold no hope?
well, I'm not saying I hold no hope, because certain things have to happen. You know, we're looking deep into things that are way outside our control. There's always hope.
Yeah.
I mean, inflation could come down because nobody buys anything. But if nobody buys anything, we're in recession.
No, yeah.
You know, and then then they cut interest rates, because if you're not buying anything, then you know, I'm in the process of I want to buy a new car at the moment. Every time I look, it's £2,000 cheaper. So I'm sitting there going, so I know something's happening. You know, because you know I shouldn't be able to buy that car for probably £15,000 lower than I could have bought it for sort of 3-4 months ago. So I'm just holding fast and going like, no, I'll wait till somebody, you know, absolutely pukes and you know, cause it's telling me a story.
Interesting.
The house market is flat. I think I know 3 or 4 people with not high value houses for sale, but you know, probably the 350 to 700,000, you know, the sort of market that should be moving. Don't even, none of them get a viewing even. So that tells you something. So there's something, you know, we've got Rachel Reeves, who, you know, if somebody said, I mean, one thing I will say about, I mean, I don't want to be too political, but Rachel Reeves, an economist at the Bank of England, she was probably, I don't know too much about it, but she was probably an analyst. So in my experience as a trader, analysts analyse. She's been given the biggest trading book in, well, she's been given our tax receipts to trade, and she's done an appalling job. You would never give an analyst a trading book. What they do is you ask them to go and research something, they come up with the research, and then the trader then makes the decision around not just one lot of research, but a lots of other research. And she's completely killed, stone dead, the UK economy. So I think we're in trouble. You know, if you want to tax, I mean, I've got three friends of mine, multi-millionaire guys, all leaving, all with their own companies, all leaving the country, setting up in Dubai, one in Abu Dhabi, right, to get out of this tax regime. So,
well, there's been a lot of shuffles in government over the last week, haven't there? So, but she's kept her position.
I'll say no more about that. I'll say I don't want to be locked. But well, she's kept her position. But I mean, I've got nothing against Rachel Reeves, but she's not a very good. She's not a very good Chancellor of the Exchequer.
Fair enough.
She's an economist or an analyst. I think that probably if she worked for the Bank of England, they want to call themselves economists, but they're probably analysts.
So when was the last time that we had a decent Chancellor, and who was that?
Wow. Well, you know, we're going over history. Well, Gordon Brown was decent in one way, but ridiculous in another. He sold our gold at the low. Yeah. You know, you go back to when he sold our gold, and I remember it was a big thing in the city. Not necessarily because gold wasn't where it is now. I'm not even sure where he sold it, around about $350 or whatever, $350 an ounce. But it was quite a big thing because it's always been something that we, you know, gold reserves was always something that was, when we used to trade currency on a gold reserve, you know, that was one of the first measures of currency. And so it was kind of like questioned, but, you know, we're talking about a Labour government that sold gold to create jobs. you know, and created a lot of jobs that didn't need to be done, and we're still paying for that now. Was David Cameron, not David Cameron, George Osborne, a good chancellor. Well, he had a tough job to do because we had no money, and he had to cut spending. Labour Party had an opportunity to cut spending recently, and they decided all the backbenchers were up in arms. They don't want to cut spending, and unfortunately, this is what you have. You have Labour Party gets in and spends, and you have Conservative Party gets in and basically stops spending. And some people like everybody to spend, and some people don't like people stopping spending. So you've got this political sort of roller coaster that goes on, and what's right, what's wrong? You know, probably something in the middle.
Probably,
austerity. Was austerity the answer? Possibly not.
Well, I think when austerity was happening, that they should have made plans. They should have made more plans for the other side, right?
Yeah. Well, I mean, we had it back in the 1990s. We had a recession in the UK from '88 to about 91, 92, and it took literally 2-3 years. And what happened was the Conservative Party of the time, they basically just stored up a lot of money waiting to try and win an election in 1997, and they didn't let it out soon enough. No. They literally kept the lid on it. They were trying to release a little bit of money into the economy the way that Conservatives would have done, and they made a mistake because Tony Blair got in with a pretty much landslide majority, and the first thing he did was spend a lot of money. So, but that money was probably brought about by being a little bit too austere in those days. Yeah. But that's history lessons. You know, history lessons. History repeats itself.
It always repeats itself. Yeah.
If you look at history,
there's
been very, very, very bad mistakes by governments in all countries, across all borders, and the fact. I mean, I've got this common saying is that the politicians are so bad that they're so bad that when they get sacked, they end up getting they end up on the public speaker circuit telling everybody what they would do differently now and making millions. You know, so unfortunately, if you're bad at your job, you get sacked.
Well,
so
yeah.
If I'm bad at my job,
hopefully I'm not getting sacked anytime soon.
So I can't sack myself.
Right. Okay. Well, Julian, look, it's been absolutely real treat to have you on today, and thank you very much for sharing all your insights and showing our viewers a bit about the institutional kind of style trading. Obviously, most of our people are retail, so it's good to get a different viewpoint.
Well, everybody needs to know as much as they can. You know, it's not just about retail. It's about, one of the things I said is that, you know, don't think that they have to trade, but you'll find the patterns are quite similar, and so when you work out the patterns, trading becomes a little bit simpler than you possibly think it is now. Yeah. Because the ability of a trader knows what to do when they're in trouble. Whereas if you don't put yourself in trouble, then you've got a better chance of picking the next kind of movement, whether it's a quick movement, a longer movement, or if you're in it for a bit of a longer period of time. So,
okay, cool. Well, thank you very much.
Okay, no worries.
And we're going to get Enzo on shortly. He's going to be doing the live trading for today, so I just need to scurry around and change up a few of the settings and stuff. So thank you very much, and I hope to see you again soon.
Yeah.
Cool. Take care.
Cool.
Okay, ladies and gentlemen, thank you very much for tuning in. Just going to take a brief intermission to change things over for the live trading. I'm not going to end the actual stream. What I'm going to do is probably get Enzo to come and sit down and then change a few settings on OBS so we can just go straight into the other thing. So let's see if I can actually do that right now whilst I'm here. Huh?
You're off there.
No, I'm gonna stay in and.
No, is it you all off there now?
Oh no, I'm staying on here. Just gonna change it all over. Don't use a mouse upside down. That doesn't work very well. Change this one to... Whenever you're ready, Enzo.
It didn't come up on my. Yeah, no, it's on your profile.
Okay, guys. So yeah, we're about to start the live trading. So I have to play you a little bit of disclosure first, just so you understand the severity of the severity of trading and the risks and pitfalls. So happy reading. Hello ladies and gentlemen, and welcome back. We just had an interview from an institutional trader, Julian, and now we're going into the live. Just give me a second to actually set things up properly. I think we're live. Oh, everything's like, I've been on so long, everything's shutting down. Right, so listen, feel free to ask some questions. Enzo's going to scan the markets and look for certain positions. Let's just see. Okay, cool. We've got that working there. Just the wrong. Okay, there we go. But that one's not changing. I need to sort my phone out. Mobile position. So this one needs to change. Yeah. Okay. Happy days. Okay, so that's all set up. So in case you've just joined us or this is your first rodeo to this stream, this is how we roll every week. We will take positions within this stream, and we will also close them within this stream.
Oh, no, we were thinking maybe that we could leave them open.
I'll get on to that. I'll get on to that in a sec. Yeah.
Sorry.
So we be rolling now. What is this? Our 5th week now?
I can't remember.
I think it's about 4 or 5 weeks.
Is
so
it?
why don't we discuss how we've been doing up to now?
Or maybe we should just get some trades on.
All right. Well, yeah. Sorry. Yeah, it was a bit of a late one there with the other stream. So Enzo's raring to go.
Okay. So we're eyeing up a long position on the cable or the pound against the dollar.
Yep.
It's in an uptrend, and could be a nice potential pullback here. So I'm going to map that out, and off we go.
I'm going to fight with these keyboards. So just get rid of that one.
Okay, so 135. So is my usual custom. I always use the tennis term for a set. You're right, Russell.
Yeah. So how has your week been, Enzo?
Yeah,
It's
good.
been a bit of a mental one for me today.
Yeah.
We've done some filming in the classroom because Julian was taking a little class with our scholarship students on FX trading. If you've just joined us, Julian used to be a big shot trader for some banks, basically doing like million and billion pound trades. So he was teaching them a bit about FX trading, so I had to film for that. Then jumped into a podcast with him, and now it's you and me, Enzo. You've got me all to yourself. How does that make you feel?
I feel privileged.
You feel privileged?
Yeah.
I'm glad. Like, wow. I feel privileged that you feel privileged.
Thank you. So we're looking to go.
Excuse the cough, people.
We're looking to go
I'm more than
long.
likely dying.
We're looking to go long on the pound against the dollar.
Okay,
And
long
I'm
on the
looking-
pound against the dollar. Okay.
Yeah, I'm looking for an entry price at 58, just above where the market is now, and a stop at 47, so 11 pip stop. So I'm just going to map that out.
Wonderful. Good
And then
stuff.
we've got some trades on the indices if I can get them in time as well. We might do a little trick with the indices. I'll explain what I'm going to do in a moment.
Oh, interesting.
a
People
kind
can
of- yeah.
people can learn from this.
Well, time will maybe learn how it's not to be done.
Well, I think we should probably stay positive. We should stay positive, right?
Our account is currently up just over 0.5%, which is better than kick in the face.
Kick in the face, yes.
Buy
Face
stop
is
here.
definitely better.
We're going in at 135.58 on the pound dollar with a stop at 135.47. And I've done something wrong. That's what I've not done. I need to work out my size. Just to remind everyone, these aren't lot sizes, these are pounds per point.
Yeah, so we're using a spread betting account. So, well, like Enzo said, it's
Because I guess if this was a lot size, this would be a very big position. Although it's not a small position, it's a good. 9.09. We're risking £100 from entry to stop.
okay. That's standard. Standard for us. Huh?
I'm gonna just have a look at it again because the price has gone down quite a bit. I want to see if maybe I can get it better. Okay. I think I'm going to go at 55.45 on this actually. So just changing the. You're right there, Russell.
Yeah, just having a
you
bit
up
of a
or what?
stretch.
Yeah. So
You know how it is.
kind of enter 3 pips lower than I originally would have liked. The market waits for no one while you're mapping out your trades. It's moving. All right, so that trade, that order's into the market now.
I've heard you brought along a special guest today.
Yeah, but I've left him there because of the transition that we had, you know.
Oh, should we just let us know and I'll go and grab him?
Yeah. Maybe we haven't got time for the.
Oh, we've got time. I haven't got to rush off today. We can probably stay on a bit longer throughout the open and stuff. You know, give you an extra half hour. Have you got things to do after this?
What time are we on today?
Huh?
What time are we on today, too?
Well, we normally finish at like 2, don't we? But we can just plow on, I suppose. Like whenever you
I
want.
thought we finished at 3.
Do we?
Yeah, it's 1 to 3.
Oh yeah, 3. Sorry, but we can go on to half 3, 4, 10.
Oh, yeah, midnight.
Midnight, yeah. Actually, it's a better time for TikTok, to be fair. Can you trade at midnight?
You can. You trade the Asian session. All right. So this trade is currently mapped out. We'd be looking to get filled at 135.55 with a 10 pip stop at 45. If this market just carries on would carry on moving down from here, we wouldn't be in the trade. So just that line above where the price is now, we would be looking to get filled at 55, 135.55 with a stop at 135.45. Okay, I'll leave that cooking. I just had something else here on the FTSE.
So that's not filled yet. You just got to stop in.
Okay, so
limit order.
Yeah. So on the 5 minute, the FTSE is coming to a potential resistance level. You can see like there's a double top, kind of double top level. You can see that on the chart. Can you see that?
Okay, cool. Oh yeah. I see that.
So that has a potential to hold. I'm going to put a momentum sell order below where it is now, and then if it breaks above that top, I'm not interested. But I'm going to map that out now, and then we may do a type of hedge, because what I'm looking to do here, usually the FTSEs are correlated.
To what?
To each other. You know, generally stock markets go up together.
Okay.
But I did see a buy signal on the NASDAQ.
Okay.
So I think I'm going to short the FTSE, go along the NASDAQ, and that way it's likely one of those trades will lose. But you like it, don't you?
But the other one will win.
Maybe.
If the NAS wins, it'll be better, because that normally moves more, right?
Maybe. Yeah. So a bit of a
famous last words.
A bit of a type of hedge there.
Maybe we should go and get your friend for luck. Yeah. Should I go and get him?
Yeah.
Okay. Right. Guys, be prepared. We've got a special guest for you on the stream today. Where is it, Enzo?
It's in my bag.
So here's your friend Enzo.
Yeah.
What was the? So it's a pig. Hang on. What's his name, Enzo?
It's that. Wasn't it that pepper? Was it that Peppa Pig?
Peppa,
Isn't it? Yeah.
well,
No, it's blue. It's blue though. Isn't it? Yeah. Don't squeeze it too much. What the fuck was that?
I think. Okay, so guys, we need to name this pig. So.
But the idea with
if
the
you've
pig
got,
is that
if you've got any suggestions,
in the market,
then please.
in the market, they say if you're a pig, you get slaughtered.
Oh, okay. Well, let's not let the pig get slaughtered, eh? I mean
in other words,
right?
let's not be too greedy.
So here's the pig on the table.
So we're going with a
full screen so people can see the pig a little bit better. Here we go, people. Here is our new trading mascot that Enzo has been very gracious to bring in.
Yeah. I need this for the moral encouragement and to remind me not to be too greedy in the market.
Okay.
All right. So right, we're going to map out the FTSE trade now. Yeah.
Smack it like you're going to buy oil. selling it.
No.
What you are doing then?
So we're going to go with a sell stop. £10 a point. Oh, little mistake I made there. I was putting the pound per point in the price.
So guys, if you've just joined us, we're doing live trading here with Enzo. He's currently scouting the market for positions that we're going to be holding throughout this live stream. Now, we only before used to hold the positions through the live stream, but there was some talk about us out now actually holding them.
I think leaving us that flexibility
After,
to do so, yeah.
But not from before. So we'll open them all, but we could leave them.
I guess people maybe, were there anyone who held the gold trade that we had last session?
I don't think that there's anyone on here from the last session.
Oh.
To be fair, it's pretty quiet out there today. So, yeah, we've currently got 0 viewers on TikTok, so not doing too well, mate.
Maybe because we didn't start on time, right?
Well, no, but we were here. Like there was, I was here talking to mate.
Oh,
so.
All right.
That noise is really weird.
It's a pig, isn't it?
I think our pound dollar traders.
We've been filled, have we?
We're gonna go long the NASDAQ.
We've been filled. Here we go. The game is afoot. So you've also got a sell stop on the FTSE at the moment now.
We're gonna go long at.
No, I don't think that has been filled, Enzo.
Let me have a look.
No.
No.
No. Still a buy stop. We're still completely flat. Get my phone holder here. Look.
Okay, yeah.
Make my
Carried on down.
life a bit easier. I think.
Let me have a look at that because I think it's come down quite a lot. May not be something we want to be. Yeah, not liking the look of that. I think I'm going to cancel that pound dollar order for now. I'll come back to it maybe and see in a bit. So we've got the FTSE. That's one of the advantages when you have a momentum stock. If the market will go in potentially the setup thesis direction, and if not, many times you won't be in the trade.
Yeah.
As opposed to trying to pick exact points, you know.
Well, I mean, Jerry was talking about momentum trades today as well, so it's funny that you should bring that up as well.
The FTSE's, we're in the FTSE though.
Oh, are we?
Yeah.
Has it been filled?
It's been filled, yeah.
Oh, yeah. So was you also going to?
Yeah, I'm just mapping out the long on the NASDAQ. There's kind of a bit of a so we're looking at
got about 45 minutes, well, 50 minutes till the open.
Yeah.
So enough time for that to marinate. But maybe on the open, it's gonna just, absolutely go mental, and we can retire. And that's what I'm hoping for.
Oh, yeah.
You are sharing half of this with me, aren't you? Yeah,
of course.
Remember?
So we're looking at 832,770. That's a 52 pip, 52 point stop on the NASDAQ. Let's see if we can. FTSE's moving into some nice open profits. It's like an operation, isn't it? Like an operation.
What is?
Doing this.
What, operation on pigs?
That's what I like.
Why did you get the bluest pig? Did you buy them? Could you explain where this come from?
It was originally a toy for a pet.
Oh, okay. Good job.
Yeah, no, it's weird, man.
So we're looking at an entry price of 832 and a stop loss at 770. And that's in.
That's the NAS, yeah.
Mm-hmm.
Interesting.
Let's have a look at the.
I mean that FTSE's just floating at the moment, so it's looking promising. Ugh, I might get myself a drink. Someone's asking, do you own a Ferrari?
We used to.
You
We had
used
a we had a Ferrari Portofino, but
Okay.
we got fair bored of it.
Why'd you get bored of it?
Well, it was more when working with my brother. We got it, and then he hardly ever took it out.
Okay. What, because you lived in London?
But I think they're saying that because of my name, Enzo, isn't
Enzo
it? 'Cause
Ferrari,
yeah,
yeah.
I understand. Yeah.
But it's still good that you owned a Ferrari.
Yeah.
Can't imagine what the fuel costs would be on that nowadays. Could you imagine?
Not cheap.
Just don't think they're a very viable car for London, though, are they? I think probably a Porsche is a bit more viable, right? If you are going to get anything, right?
Mm-hmm.
So I hope that answered your question. Redesign 1. I hope you're having a good day today, and if you do have any questions, trading questions or any other questions, feel free to put them in the chat and we will answer them as best as we can.
Okay. Well, look, I'm still eyeing up trading against the dollar at the moment. I think there's a opportunity on Aussie dollar. Originally I was looking at doing it with the pound, but yeah, let's have a look here. It's on the 3-minute time frame. Right, there we go. 3-minute time frame. Mark this out.
Someone's asking, is it 20k live capital or prop firm?
This would be a live one.
This would be live.
Not prop, no. We do have prop firms, but not this one.
Yeah, I mean, we do actually have a prop firm here at Educate to Trade. We have our own prop firm. You can learn more about that in our free Telegram group. That'd be in our bio. But this is a live account, so it's all on the line. But you know, I trust Enzo because he is our, you know, our risk management team here at Educate to Trade. One of the risk management people here. So I don't think we're going to be blowing any accounts today. Well, I mean, you say that you could get slippage, right?
No, yeah, but it's unlikely unless
some sort of event happens. So please, let's hope no events happen. Thanks for the follow. Redesign 1. I can't read your name because it's in Chinese writing, and I haven't really perfected my Chinese speaking just yet. But are you trading yourself, or what's your situation?
FTSE's moving nice, isn't it?
What time is NFP? We can ask our scholarship students. Look, there is a 3 o'clock shout coming out there.
3 o'clock London time.
So what?
3 o'clock London time.
Yes, that's 3 o'clock London time. So oh, your name is Joshua. Hello, Joshua. So yeah, 3 o'clock London time's NFP, and these boys behind me will be able to tell you probably a little bit more about it, because they are doing a scholarship here just to trade fundamentals. So what do you boys expect, or do you just read it and take it as it comes?
Well, previously it's had massive spikes, so hopefully this time she'll have a massive spike out to the upside down.
So you're expecting a big movement today. It's just whether you can get in quick enough.
Yes, it'll be a massive event this year, so.
Okay.
There's a minus 750 forecast on.
Yeah,
There's a minus 750 forecast, so
It's not on the calendar, so that'll be helpful for people watching.
say that again.
It's not on any of the calendars, so that'll be helpful for people watching.
Oh, sorry, you're on one site that tells you something different than other sites.
Yeah, none of the stuff, so you're anything except for the one that.
Minus 750.
So it'll be a minus
What website is that, Chris?
What website's that? M&I?
It's one that Brad pays for.
Oh, so it's a paid for site, and they're giving you a bit of so you can have a bit of inside information here from somebody who's paying for a website. Yeah, so we are a live trading office in Bromley South. You're more than welcome to pop down here. You can find all our descriptions in our bio. So yeah, it'd be great for you to pop down. You can come and have a free day here at the office. No, we're in London as well. So we're in Bromley South. So would you call Bromley South London, or?
Yeah, it comes under.
Yeah, it comes under London. So yeah, not Bromley as in miles away. Bromley South, kind of near Croydon, right? What would you say the nearest place is that anyone would know? I'd say Croydon, right?
Not that. Well, it is. It depends what you mean. It's not actually right next to Croydon, is it?
Yeah, but no one's heard of Bromley, right?
Yeah, Bromley, the biggest borough in London, the biggest land mass in.
Is it?
Yeah.
It's got a lot of hills. I know that much.
So currently, the FTSE position is our only live position.
Okay.
So you can
And
see
that's actually
the line.
wow,
the
we're
line. Yeah.
getting richer by the second.
It's tivering and davering.
We can almost afford lunch.
We've also got Australia dollar USD order on at 66.02, and we've got a NASDAQ order on at 8.32, I think. Yeah. So happy days. I can go now, right? Done my job.
No, you're here until 5 o'clock this evening. We want to talk more about this pig and where you obtained it.
I was saying a while back that on Wall Street,
yeah.
Wall Street was originally a farmland. Yes, it's true.
Oh right.
Yeah, it's not a joke.
Oh okay.
Yeah, and before all the urbanization kicked in New York, right? And so the language of the animals found its way into the early trading.
Bulls, bears, yeah.
Yeah, bull. Yeah. So there's a phrase that says bulls make money.
Yeah.
Bears make money.
Yeah.
Those who, the bulls actually fight by pushing their horns up.
Right.
Which is why we refer to a bull market when it's going up.
Yeah.
And the bears fight with their
cool.
their paws down, right? And that's a bear market. It doesn't mean bear is an empty or enclosing, right? And
maybe we could do that next
but
week.
then you have
this naked.
yeah, but then you have two other types of participants.
Yeah.
The sheep.
The sheep.
Yeah, the sheep get trampled underfoot.
Okay.
Because the sheep trade with no sense of they just follow
Goldman Sachs.
They follow like live trading sessions. No, I'm only joking. But they don't have an intentional strategy. They're all over the place.
Okay.
It's like 1 minute
strategy hoppers.
One week they're doing ICT, next week they're doing order flow, then third week they're doing candlestick patterns, fourth week, and it's like there's no clear intention to their strategy. And then you have the pigs. And
hold it up when you do that.
So bulls make money.
Yeah.
Bears make money.
Yeah.
Sheep get trampled underfoot.
Yeah.
And pigs get slaughtered.
Pigs get slaughtered.
And the pigs represent the greedy ones.
Right.
Yeah. These are the ones who outstay their welcome in the market, because
they don't close positions.
Well, they get rich. They get rich quick. I want to open an account and make 1,000% in a day, 100% in a month, or whatever.
Oh, that's achievable, but it's not sustainable.
Exactly. Yeah, exactly. Or if it is, it would be, the chances of doing it would be the equivalent of probably winning the lottery.
You're probably better off winning the lottery, right?
Yeah, there's something that says easy come, easy go. Yeah. So
I wonder if that's true for most lottery winners.
Still in this
spent all their money. Do you know anyone who's been a big lottery winner?
Indirectly, yeah, a few. Yeah.
And did they spend all their money pretty
I
quickly?
knew, we're friends with with a couple, quite a wealthy couple, who made a lot of money in financial services, and part of their service was helping people who won lottery money.
Oh, really?
And they done a party at their house once, which we went over to, and all the people who won the lottery were so miserable, and they were having all kinds of problems. You know, after they'd won a massive amount of money.
Rich people got rich problems.
Well, some of them lost it all, believe it or not.
How did they lose it? Bad investment?
Yeah, pretty much. Yeah. Must have given it to me.
Did you hypnotize them? Yeah, because that's one of your one of your things that you can do, right? Is hypnotize people. Right. Someone's asking, will gold go to 3,655?
Well,
that's my TP.
Will it go to 3,000? So, Russell, I'd like you to bring out. Hold on a minute. I'm going to ask Russell now.
Maybe this is it. Maybe if we rub him like this.
No. The question was, will gold go to 3,655? I'd now like to ask Russell to bring out our special indicator. Ladies and gentlemen, it's called the crystal ball.
Where is it?
Have you got the crystal ball, Russell?
Where is it? Where is it?
If Russell doesn't bring out the crystal ball.
Here it is. I got the crystal cup.
Yeah.
Should we rub it?
Just so you know, anytime you ask anyone who asks me questions about will the trade win, will gold do this?
Let's have a look at gold though. Let's see. There might be some tradableness on there.
But in terms of what
what do you reckon? Looking at that.
Yeah, I mean, from my methodology, I would be inclined to, if I was trading that, we've currently got quite a few positions on. I'd be inclined to take a long position.
You're not going to unplug anything, are you, Avik? No. Okay.
I'd be inclined to take a long position.
Okay, well, you've heard it from Enzo.
But that's just based on my strategy. I mean, someone else.
He's saying that he's scared because he got a huge loss.
Okay.
Well, sorry about that, but was that loss part of your strategy? I mean, this is the most important question. So, why don't you answer that question?
Yeah. So when you say you took a huge loss, who is the person?
Joshua.
Joshua. I mean, one of the things you want to do in your trading is always predefine your risk before you get into a trade. So currently, if you look at the FTSE position that we're in here, currently it's showing some open profits. But you see the line above the resistance level, that's my stop loss. Now, barring anything unusual, if the FTSE decides to rally from here for whatever reason, Because there could be all kinds of reasons why it would do that. I wouldn't know why.
I would.
Of course,
I've got the
the crystal ball. Then I know I'm going to lose £100. I'm not going to lose £1,000. So, and £100 relative to the bankroll of the account is an acceptable amount of loss to take. So, Joshua, when you enter a trade, you should ask yourself, from my entry to my stop, have I calibrated what I am prepared to risk in the trade?
In relation to your account size.
Sure, in relation to how you're trading and your account size and your risk appetite. I'm not saying that you can't trade aggressively, but be wise about the amount you risk per trade. I hear of traders who risk 5% of their account or even 10% of their account. Well, you're relatively a small number of trades away from bankruptcy, aren't you?
Especially if it's a prop account.
Okay, yeah, prop accounts you have to risk a heck of a lot less.
Because your account size isn't actually your account, is it? So
right. So Joshua, to avoid having future big, whatever you would define as a big loss, my guess is that you didn't intend to lose that amount when you got in the trade. It wasn't like you thought, I'm going to get in the trade now and I'm going to take a really big loss. You didn't. I'm sure you didn't do that. What happened was you probably didn't have a plan.
Thanks, Brad, for the roses.
You probably didn't have a plan, or if you did have a plan, you didn't follow it. I'm not trying to. I remember one day trading crypto, and whatever I did, I lost my whole sense of orientation, and I took a really big loss, like $50,000 in a day. I took.
Why? You couldn't put a stop loss in, could you?
No, I mean with the particular strategy I was using, it wasn't geared towards using stop losses.
Okay.
Because I was trading on volatility and I was using what's known as a spot account where you don't use leverage.
Okay.
So there was no leverage in it, but even without leverage, I was okay. So the FTSE is let's move down a little bit more from the entry.
Oh, look at this! We're on fire. How much did you? What was your? Well, actually, it's always the same, isn't it? It's 100, isn't it? So the FTSE trade is doing relatively okay.
Yeah, we've still not been filled on Aussie dollar or NASDAQ 100.
So they were in the meeting today. They were talking a lot about trading Aussie yen.
Aussie yen, yeah.
Aussie yen's supposed to be quite a good pair to trade. For some reason that I can't remember. What was the reason Aussie yen was a good pair to trade today in the meeting?
What's that, sorry?
What was the reason Aussie yen was a good pair to trade that he was saying?
Because of the interest.
Oh, yeah, that was it. He was, so that was it, because he was a bank trader, so they used to just hold it and then just get the interest off of it, and they would come out with the same money that it wouldn't really move, but they would just get, the interest on it, so that's how they'd make the money.
Yeah. My broker's currently paying 2% annual on it, 2.13% on a long.
Really?
Yeah, it's there.
Oh, cool. On what? On anything?
No, on Aussie yen. If you hold it long, you'll get. Say you got £1 million long position.
Yeah.
It would pay you annualized. It would pay you £23,000.
And they were putting billions in.
Of course, they're leveraging up. Yeah. Obviously, there's risk if it goes against you because you're going to lose more. On the position,
but it was quite steady at the time.
I tried it once on live cattle.
Because of the interest.
Live cattle pay interest rates. Buying the cows.
You bought some cows.
Mm.
Is it like oil futures where if the contract expires, you actually have to take delivery of the barrels?
If you trade in if you're not trading a derivative,
yeah,
and you actually trade on the real futures market and you don't close out your futures contract,
Yeah.
you would be. I guess it. Yeah.
Because this is what was happening a lot in COVID.
Right.
That they were trying to shift off all this oil to people.
Yeah.
And there were like ships of it off the coasts.
Yeah.
Because nobody wanted to take actual delivery of their physical oil.
Yeah.
But that wouldn't be the same with cows. They wouldn't turn up at your house with like.
Yeah, you could. If you're actually in the proper futures market, you'd be expected to take delivery of cows and pigs. Yeah. I heard of one guy on Wall Street that turned up with like 2 lorries full at the trading floor.
What, of pigs?
Yeah.
Really? That's classic. Did they just release him into the?
Well, there's already plenty of them on trading floors anyway.
All these pigs roaming around.
Yeah.
Oh, that's funny. Yeah, so funnily enough, the only thing you can't really trade in the futures is onions.
Yeah. I think I could cry about that.
You obviously, well, maybe you tell
You used to
people.
be able to trade pork bellies, but they've done away with that contract.
I thought it was lean. You can trade lean pork bellies now, can't you?
So the FTSE looks to be hitting a 1-to-1 at the moment.
Did they really get rid of pork bellies?
They traded pork bellies on futures. Yeah.
Yeah, but what? They've stopped that now.
Yeah, I believe they've done away with that contract. Yeah.
Why?
I don't know. It's just maybe lack of interest, lack of participation. And the pork belly, like the same thing as what we used to call tripe.
No, I don't know what pork bellies are. I'm sure they sell lean pork bellies still. Maybe we could Google that.
Seems to be a lot of selling pressure coming into the FTSE now.
That's good for us, right? Cool. Look at that. £77 up, 80 quid up, 90 quid up. Look at that. We're gonna retire, Enzo. Dinner's on you tonight. Who is this? Weird. So if you just joined us, we're live trading here with Enzo, and we are currently in a FTSE short position, which is doing all right. We have a buy stop in for Aussie USD and a buy stop in for NAS. Both of those have not been filled yet. Quiet day here at the office, eh? Until 3 o'clock. NFP. Have you guys traded in NFP before?
Well, NFP was Friday, but this one's the Freedom one. Yeah, Freedom NFP benchmark revision.
Interesting. So it's a revision.
So
What's a revision mean, Josh?
it means they adjust it.
Oh, so they're adjusting it. What, because they got it wrong the first time?
Well, it's just they do it once a year.
Okay. So these guys are waiting for that. They've got about an hour, just under an hour now, until that hits, and we'll probably be able to see that. What are you thinking, Enzo? Are you gonna exit all positions before that, or are you just gonna roll with it?
I might hold this FTSE until the US Open, because we're sitting on quite.
No, I mean like through NFP. Would you hold positions or?
Sometimes, yeah. Depends on the type of time frame I was on, because you have to be aware of volatility. So when you're trading micro time frames, you want to be careful, especially around news. Like,
Because you're gonna get chopped
just
out.
the slippage you could get. But,
Oh right.
but it's not to say
Not if it goes our way.
No, true.
But yeah, I know what you're saying. Yeah.
USDJPY. It says on here 3 o'clock on investing.com.
I'm tired today. Probably not the best thing to be yawning on a stream, right?
Let me see if it goes on for any further. Yeah.
So guys, if you have any questions, please
It was from 3 to 6.
pose them forward and we'll get them answered for you. Trading related, or you know, anything really. We can consider any kind of question.
So we are at 9240.76. I'm going to liquidate half and leave the rest to run, hopefully.
What on what?
On footsie.
Oh, can't we add? Instead of, if you think it's doing the right thing, we should add. Did you half it? You did, didn't you? Should have added.
All in good time, Russell, we will.
We had this discussion that
Yeah,
you weren't
it's
going to
okay.
take profit anymore, you're going to add to the position.
I think with the right momentum, there's a place for it. Absolutely, I'm in agreement with you. We are in at...
Alright, so we took some profit, so I can press this little button here. There you go, look at that.
9248, stop loss.
Mm.
Okay. Maybe I should have listened to you, Russell. Maybe we should have added to it.
Look now. It's doubled since that.
No, I want to go that far.
Next time you're going to take add. Back yourself, Enzo.
That's right. That's right. I've got you.
Back yourself.
I've got you to inspire me.
You cancelled all the other positions now?
Because of the time we're at with the US Open, I'd rather want to let the volatility of the US Open die down and then see on the back of that.
Are you going to shut this one then?
No. That's what I mean. I'm going to leave this to run now. Because if it runs down, we'll still have a really...
Why don't you stop loss to break even and then
Done.
And then add to the position
Stop loss to break even.
and then add.
If we added to the position, then we wouldn't be break even at stop loss.
No, I understand that, but we could add now.
Add now.
Yeah,
And
just have the stop loss rate.
well, maybe you'd like to do the trading, Russell. I mean, it seems like you really want to get involved.
I just want you to add to the position.
What you say, Russell, actually, you make a lot. You're right. In many ways, you're right. And you make a lot of sense.
It's only because I
think-
read it in a book.
No, but I think you're absolutely right. And it's one of the hardest things to do in trading.
Yeah,
I mean, it's not to say it's
a
wrong.
lot of people add to their losers and take away from their winners.
Yeah, that's true.
Where really, if you want to be, you know, the elite traders, all the elite traders will do the opposite, right? Add to their winners, they back themselves.
Yeah. And
So, how are we doing? Be nice to see you lose a trade for once, Enzo.
I have lost a trade.
Have you?
One, yeah.
Maybe I'm just lucky.
It's you, Russell. You're just like, and
Well, no, you can't blame him. This is only his first week.
I think
That noise is really real, man.
losing trades are good. I think that too many of us are obsessed with winning, but losing isn't necessarily a bad thing in trading.
As long as it's part of your strategy.
Yeah. Obviously, you know, we appreciate I mean, I think we've done 5 sessions. A lot of people would think, oh, well, you've had one losing trade, all your other trades are winners. That automatically means you're a good trader. But it doesn't necessarily mean that, because a lot of traders are winning a lot but losing money. So
Yeah.
really it comes down to risk reward.
Yeah.
And there is a certain time constraint to what we do here. Obviously, it's nice to have winning trades. It's nice to just win, but you trade long enough, it's gonna even itself out. There'll be losing trades as well, and it's not about really winning versus losing. It's about profitability. So you can win a lot and lose money, and you can lose a lot and make money.
Yeah.
Are you based on the system? Are you?
Well, we had one guy here who had like a 90% win rate, but he wasn't actually making money, was he?
Right.
You were telling me about that the other day.
Well, I think he was, but in the end it blew up because if you're constantly taking like, if you know, like say on this FTSE trade, I've taken a bit of money out of it, but I'm giving it the potential to make more money.
I said to add to it.
You did. But I think maybe you should do a live session, Russell, seeing that you. I can just sit by you and watch you do it. And then the other thing is that many traders are good at telling. For example, say this FTSE here. You look at it now in hindsight, but I had to point out to you that double top, didn't I? It wasn't obvious.
No.
Okay, which is a miracle for me because I can't see very well at all.
No,
that's not a negative on your part, but it's that not only do you have to see it, you have to then take that to achieve what you see now. That to play that play. In this case, it looks like it's playing out as projected.
It's doubled again since you didn't add to the position.
Yeah. And after the fact, it's easy to see.
Oh yeah, hindsight. Yeah, that's what they say about
2020.
hindsight. You know. Yeah. There is some saying about hindsight. So. Yeah.
But whatever. I mean, there's no absolute right and wrong in trading. Is it wrong to take partials? No. Is it wrong absolutely to add to a loser? No. Is it wrong to add to a winner? No. It's all about the trader's strategy that makes sense for them. And if they can be consistent with that and know that that plays out over their trading project plan, then happy days. But I think what we have to get away from, because you hear like a lot of questions a lot of times, you know, like people say this double top here on the FTSE on the 5 minute. How if when we get in, someone would say, oh, how do you know that it's going down?
You don't.
You don't know. How do you know gold is going up? You don't know. What if this happens? What if that happens? Huh? What if a flying poo comes through the window and hits you in the face? What if anything? What if anything? Yeah. Russell, you're tired today, yeah?
Yeah. I'm fading into the ether of trading. We've got 15 minutes until the New York Open. You know when you do that, everyone can read your emails, right?
Yeah.
Okay. Just wanted to let you know that. Someone's asked, so it's just luck then?
No, it's probability.
Yeah.
If you have a system, a trading system that can make you money over time consistently, then it's not luck. Ultimately, it's probability. Luck is relying on just pure randomness, but probability is not the same as knowing for certain what's going to happen on every trade you take. So there's a distinction there between.
It's luck on one trade, but a set of 100 trades is not luck if you have a strategy, right?
Yeah. So there's a certain at a micro level there's unpredictability, and at a macro level there's predictability. Yeah. When you have a statistical advantage. So of course luck plays a part at the micro level because of the randomness that exists in any activity. But if you have probability in your favor and you keep playing that probability over and over again, then that's not luck.
Well, that's what casinos do, and that's how they make their money.
Exactly.
That's their business model.
Exactly.
They have an edge and they effectively use that edge, and over time that make sure that they're making profits.
Exactly. So casinos appear to facilitate random events and can make consistent money, whereas traders say the market's not random and they can't make consistent money. So what's going on there? And then so the casinos has worked something out we haven't. That probability played repetitively leads to predictable results, even if at the micro level you don't know. Like when the casino spins that roulette wheel, they don't know what's going to happen on every spin, but they do know if they keep spinning that wheel that the advantage,
the odds are stacked in their favour.
Correct.
Even if it's not a lot,
yeah,
eventually it will add up to being a lot.
Which makes
we're nearly at 100 now.
Which makes the I think this trade we've ended up, well, let's see what time. Maybe I might do a time stop on
your torch is on. Probability in what? The charts, he's asking.
Well, okay, so if you look at this FTSE setup here, can everyone see that when I entered the trade and mapped it out, we were talking about a double top? So can you see that the FTSE's come up to a level 2 or 3 times there, or 2 times clearly? Yeah? Okay. So there's a pattern in markets that when that happens, there's a probability that the market will hold there as it has today at a resistance level.
Yeah.
Or on the inverse of that, it would hold at a support level.
Yeah.
Okay. So that doesn't mean every time.
No.
But it means that a percentage of the time, and you'll know that through testing it. Then the important equation is, on this trade we risked £100. Okay. Now, if we were to close this trade now, how much have we made? Maybe we've made £130.
Well, we're 30 in, and we're at 100 now, yeah. So.
Right. So at this point, we're making more than we risked.
Yes.
Okay. So that means we don't actually have. If we follow a procedure where we make more than we risk, okay, then that means that we don't have to win more than we lose.
No. We
can lose more than we win.
Exactly.
So the probability is not even something that has to happen most of the time. Is that making sense?
What's going on here? Oops. I'm supposed to do something else today. Yeesh.
Yo, Israel launched major airstrikes against buildings in. So,
Somewhere on Twitter said oil these have spikes, so I bought them all. I exited one and made 4K. Okay, I'm going to exit this just prior to the US Open.
Why not on?
I think it's a nice result of that. So a 1 point, I think a 1.3 on that today. 255.
We're going on trading, we're not on trading. Just jarring. What did you say, Josh? Nice.
Yeah, that was the long position on gold. Right, I'll take a break.
Thank you. Sorry, I'm just trying to sort out another situation here.
Yes, please.
Sitting there now and right. Now then it's going to come to we're coming to the end of it anyway because we started late. Might have a little chat next week. Start the time would be a good idea.
Look at gold. Let's go.
Jerry's trying to do his webinar live, so
Clashing.
yeah, he wasn't not supposed to do it today, is he? But he's going away, so I don't really know what I'm going to do.
You can draw it to him. Can bring it to a conclusion if you want. We've done a bit.
I think it's a bit late now, anyway.
Yeah.
It's a bit late now. I don't know what it's. How's that doing anyway? Did you shut that trade?
Yeah.
And that's what I've shorted it on, can't we? 4-4. What are you putting this stuff for? Josh, what are you putting it for? Josh.
Someone says, fascinating to watch. Enjoy the rest of your day. You wanted to know what are your sentiment indicators. I think he's gone now anyway. So.
I don't use them.
Okay. Good stuff. Oh look, there's nobody on here. We should go, right?
You're saying we should buy it?
Want to end this?
Okay.
It's not exactly busy on there anyway, so. Alright, look, gonna end the stream now. Thank you for joining us. It's been a bit of a quiet one today, so yeah, just gonna. Oh look, it's Sawyer. Do you remember? I don't. I wasn't here, but Tom is here.
On me.
He's watching now. Look.
Hi. Did you get the footsie, Tom? Footsie short. Tom's a good footsie trader. I remember.
Oh, is he?
Yeah.
Yeah, I never met him, so but he's saying hello, Enzo.
Hello. A gift to you, Tom. Footsie short today at on the stream. I don't know if it's going to go zero though. We got out little for the end.
Yeah, it's a shame that. I said you should have added to the position.
Should have.
Shoulda, coulda, woulda.
I think we've got a short window to trade in, haven't we?
Yeah, you said you were going to hold him.
Unless, yeah, we could do that. I think we're dithering and davering between that because part of the, I suppose the example with it is that everything we do in front of public audience rather than because then you're taking it behind the scenes what you're doing, I suppose.
Yeah.
But I suppose at the very least, yeah, we could leave that flexible for next time, I suppose.
I think so. Right, should we do one? Leave Tom. Would you do that to him, Enzo, whilst he's online, or should we now have to stay because Tom's here? Yeah.
Good.
All right. Well, thank you very much, people, and I hope you have a good rest of your afternoon. I'm going to go home and go to bed and not wake up for 3 days. So thank you very much, and good night.
Good afternoon, you mean?
No, I'm going to bed. Good night, innit?
Have you got a thing tonight then?
No, I'm going to bed.
Oh, you haven't.